The Monetary Policy Committee of the Central Bank of Nigeria has voted to increase the benchmark interest rate by 50 basis points to 18%. Now, the CBN Governor Godwin Emefiele disclosed this while reading the communique of the second MPC meeting of the year on Tuesday. While addressing journalists at the end of the two-day meeting in Abuja, Emefiele said the committee voted to keep the asymmetric corridor at 100 or plus 100 and minus 500 basis points around the MPR, and the liquidity ratio of 30% and cash reserve ratio of 32.5% were also retained. Well, analysts in the country had predicted the Central Bank of Nigeria and the MPC may not raise the lending rates at the end of the Monetary Policy Committee. However, the governor stated that the slight increase is to mitigate the effect of inflation and other economic issues. So, what impact will this latest increase have on Nigeria's businesses and, of course, equities markets, specifically investors in the capital market, vis-a-vis, of course, the current global, economy and the crisis that is rocking the global financial market? But let's quickly give you this figure to look at. And just before, to provide a background for our conversation, look at the global inflation rate for February. Ghana, let's start from Africa now, 52.8%. And if you look at Nigeria at 21.91%. South Africa, currently, the inflation figure is at 5.3%. Now, in Africa, well, Ghana, especially West Africa, Ghana is the highest country, is the country with the highest inflation rate with about 52.8% because of the debt crisis currently rocking the country. Now, Nigeria at 21.91%. That's February inflation, which was just recently released by the National Bureau of Statistics. And if you compare that to South Africa counterpart at 5.3%. Now, take it further and look at the global scene. Now, UK with 5.7%, US with 6.04%. And of course, the Federal Reserve Chair, Jerome Powell, is saying that Fed could increase the inflation rate there. But let's move away from that. That's a background and why countries around the world are beginning to taper with interest rate. Look at what Ghana has produced. That's about 28%. Ghana has 28% of interest rate, while inflation is at about 54%. And if you look at Nigeria, interest rate at 18%, inflation rate at 21.91%. South Africa, look at the interest rate at 7.5%. UK interest rate at 4.25%. US 4.75% of lending rate. That's, of course, just to give you a glimpse of what is going on around the globe with regards to financial crisis and what each country is doing to manage, mitigate the crisis. Well, so let's get talking now. Ambrose Omodion, our Chief Research Officer, is still here with me in the studio. Talk to us about this. First, did you envisage that the CBN was going to increase the interest rate by 50 basis points?
Yeah, I expected not up to that 50 basis point, but I believe that I told you earlier that it's not because the economic data permit it or are giving rise to it, but because of the hawkish nature of CBN and also following the trend of the global central banks of the world. You saw what happened in the the first one for this month was held in in Europe. The European Central Bank, which also increased their 50 basis points, but also all eyes was also on Fed to do the same 50 basis points. But when the Fed chairman appeared before the Congress in US, it was telling them the reason why you should make it 50 basis points. Suddenly or along the line, we saw the financial sector or the banking sector were up with different kind of distress positions, and that also changed their position. Instead of making 50 basis points, they did what 25, which is 25 basis points for them. But back home here, also you can see that the committee here didn't vote for 100 basis points that have been the hallmark since they started. The fourth one was 150, other ones was 100. But now we're seeing from 100 to 50. Naturally, you can see also they're also slowing down, in terms of. But we want to look at the rate at which inflation has moved and interest. You're not going to balance it. Has it made any impact? Because if you look at the global scene, they're all talking about either being a hawkish or being a dove. I don't want to put them there. On the whole, we're seeing the impact on what on the financial system in matured economy. That this what we're saying that the banks there are failing. It's not as a result of only either non-performing loan. It's a result of also high interest rate that would also have a way also impacting the bank positively and also impacting negatively. Because when the rate is high, they are found to be what non-performing loan. Big companies or that are borrowed with you might not be able to service their loan again because of high rate. But when they borrow, it might be low. But because you are continually raise rate, burden of servicing that might lead to what bad loan and who's going to affect. At the end of the day, it will affect the bank. But I think the portion of the people that are famous is the economy, because you can't separate the economy from, like we said, that banking is the engine of any economy, and if the economy is not doing well, bank also get impact of that economy. That's why I said it's a mixed reaction from this consistent rate hike for almost 1 year in matured economy. Our own is about 10 months or since we have done it. And if you come back home here, look at the rate, we have increased rate from the month of May to that's about 6.5%. And inflation also have moved by 5.09%. That means we have not seen part of rate hike on controlling or on checking inflation. That means when the CBN take this step of naira design or that, and also see that it's a part of them trying to make sure that their policy start making more impact. That's why I believe at the initial time that this time is not time for them to hike rate, because already the cost of borrowing is high. If you hike rate, it will also affect the economy. As you just said, both the economy and the capital market, whenever you write a hike rate, it affects them. The economy will become fund become very expensive. Capital market fund will move capital market from where there is risk to where there is less risk, because when you increase rate, fixed income market become a bit safer because you will earn more. But the thing again is that inflation in Nigeria is high. I think it's about 21.91, and your rate you are having a other yield from all these fixed income are below 16. Automatically they are seeing negative return. And that's why I said at this point, for those that are individual investor or retail investor, going to fixed income market might not be the best alternative for them now. But for the banks that are big or that can do fixed income, going to bond, going to treasury period. But for you as earning small money, but that's when you want to take it to fixed income, how much you want to earn for the day. At the end of the day, inflation is going to work. If you are in equity space, you are earning your dividend and capital appreciation, you can even match the inflation or even surpass it at the end of the day. That's why for me, it's all about knowledge and insight that we need now to trade the market now. Anywhere in the world, once you hike rate, it affects the economy and capital market. But because we're in any season, like I said earlier, because of dividend yield, but after any season, we're going to see another policy coming. As I tell you, there must be policy shift in the incoming government. They won't play the way the incumbent government is doing. They have another strategy also to put Nigeria economy in the right direction. If that is achieved, then we can now start seeing foreign investors coming back to Nigeria, not on interest rates.
Let's take a few points on this, and then we'll move on to other things. Some people believe that the reason why the CBN is also jacking up this rate is because the other developed countries, developed economies like England, Fed, sometimes they contemplate, and they have been also raising interest rates.
That's what I said. That it's just like a trend. That's why I said even when there's no need for us to increase rates here, because it's a trend that even when US inflation slowed down, we saw an increase. Even for UK own is understandable because the inflation have moved from 10.1 to 10.4. Then also in that case, they also even increase it. They don't have to increase without 25%. And also they've given insight that before May, they must start doing normalization. That means they start slowing down because they've seen impact of this rate on global banks. Usually, you saw what happened in a Signature Bank, you saw what happened in First Republic, you saw what happened in Silicon Valley Bank. So all this work happened to credit street banks.
We'll talk about lessons to learn from that in a moment. But let's look at because they are saying that they raise interest rate. That, of course, means that the cost of borrowing, don't you think we also need to take that into consideration when these international banks, for instance, Fed Reserve, England Central Bank, when they raise interest rate, some people believe that usually or normally or naturally will increase the cost of borrowing. Yes. Do you think we need to consider that or factor that in our own deliberation when it comes to either raising interest rates or maybe reducing interest rate?
It's the same principle that once you hike rate, cost of borrowing will also affect your business activities. You can see that when funds are cheap, companies expand, they employ more. But when cost of borrowing is high, you can't borrow and the business cannot service that borrowing. For that, they want to leave some business away they don't venture into new business. Why it's so happening in Silicon Valley Bank is that those companies, because they are into tech-related business, they are more of tech to bank that really accept deposits and also encourage, kind of lend to the bank, to the tech companies. And tech companies, I'll tell you, they are the most active in terms of research and development, because innovation is the mother of the day when it comes to technology. You can't be using technology of 20 years now or 5 years ago. For that, they borrow more, and this bank is more of into what called capital venture. And then when you also borrow it and cost of borrowing it is high, it's going to affect you paying back. That is what happened. That's why I said there is a misreaction, impact of what? Of rate hike and also recession around the corner. But if not check, I will tell you this rate hike will usher the global economy into. That is why I believe that CBN and his team are always smelling it. That is why we saw 50% basis point. It's possible that at the end of by May MPC might make 25, depending on what happened between now and then. And also, if actually they want to remove subsidy, we might see either another hike or depending, because it started when he was saying that because also in view of subsidy removal, in the nearest future, this is to keep it. But if removal, I tell you, that subsidy removal also going to affect inflation seriously, because transportation is one of the major factors that affect movement of goods and services. Don't forget that in the inflation basket, food items are most there. They are the most, what that means, if you are moving food basket, food from one place to the other, the cost of moving it will be factor. Price of those goods will remain up. That is why, for me, before the government going through the movement of that, it should have a plan to cushion the effect of what the removal of subsidies, so that movement of passengers and also goods and services would be at what at a at a high cost.
Let's wrap it up on this note. What lessons can we learn from there to strengthen our own banking institutions here, especially with regards to the listed banks or the listed company who are on the exchange?
I will see it in two ways. One, from the regulator angle, and also for we investors.
Right.
For the regulators, they've come out to say that our banks are healthy. The capital adequacy are in order. Liquidity ratio of these banks are in order. The earnings of these companies are in order. The balance sheet are in order. It tells you that all these banks are healthy. Let me put that right way. Now, it tells you also at the same time that because they are healthy, they can afford to pay dividend and other stuff. Well, this is for CBN. But for the investors, because if you see what is happening in mature economy and what has happened in Nigeria before now, don't forget that anytime in Nigeria here, they will call nationalization by CBN, they only consider those, depositors in those banks. They don't think the world of the investors. What is happening in mature economy now, I also show you that, you can see how the secretary to Treasury in US has gone to the, for testimony or to meet the Congress why they are intervening in all those things, because they want to protect what depositors. You can see it. That means for any bank failure in any part of the world now, the interest is to protect depositors' money. That means investors are at the background or at the back seat. That means for investors now to know, because it's their hard-earned money they invested in those companies before the investors before the depositors start coming to deposit money in that bank. For me, it is now done on investors to have quality, relationship with their managers. Having quality, not just going to AGM or going to what's it called, the account audit committee and be praising the bank. It's time for them to start looking at where things are good. You let them know. If not, just because when anything happens to that bank, it is you, the shareholders, that will bear the brunt, because you are the the last resource. They say that the common shareholder.
Because I remember when Keystone was taking over. We remember when some other banks like that were taking over.
Afribank,
yes. But the recent that was taken over was, I think it's
Skybank.
Skybank. Skybank. I remember. Skybank that became Polaris. Yeah. So that was the recent. And when that happened, a lot of investors came up, or shareholders, came up with complaints and all of that.
What has happened to that? Till now, it does tell you that for investors, for shareholders, they should have quality, investigation of quality monitoring of their investment. Knowing that the banks, because even when you said the CBN is not talking about, but they are talking the other way for the investors. Anywhere in the world, the CBN, the regulator want to protect what the depositors. That means it's not done on investors to have quality relationship. Not just going there to AGN and be thinking, hey, you have done well, you have done well. No, this time to ask questions that bothers what your invested money in the company.